Hey guys, how's everybody doing? Welcome back to the channel. So it's the weekend before we go into earnings season. Well, it really started last week with the banks, but we're about to get into it really heavy. And I just found something really not concerning because I mean we're all I know looking for a pullback so that we can get into stocks at a cheaper price. But what I noticed is last earnings season, which was back here in October, the overall market, if we look at the SPY, pulled back. Okay. From the second half of right when earnings season started of October, we went from 353 to hitting a low of 322 on the SPY before rebounding right after earnings season. So, and this was, basically a big run up in the overall market. We ran up here, pulled back, ran up a straight line again, pulled back, and then we've been going up ever since until we're getting to the new earnings season now. Now, if you look at a stock like Citibank, these are the big banks that killed earnings and their stocks went down. Look at this one. From hitting a high of 69.58 right before earnings, day of earnings, and it dropped $9, $8, really, for blowing out earnings. That's because the stock has done nothing but run up since the last earnings report. A lot of times when stocks run up to earnings, they sell off no matter what. If they ran up to earnings, they will sell off without a doubt, okay? Even if they blow out earnings, they will sell off. Look at this, sold off right to the 200-day moving average. So at this point, this is a good buy. This is where I'd be considering buying Citibank. And then especially when it goes over the 20 EMA, then you know that you're back into a bullish phase, which will probably happen with Citibank within the next week or so. So if you're watching this, I would suggest buying Citibank. Other than that, I don't know what I'm talking about. But anyway, let's look at stocks like Facebook, okay? Their last earnings report. What did we do? We went from 300 to 257 when they blew out earnings. All right? These stocks, let's look at Apple. Same thing. Second half of October, 127 to 107, and right where earnings was. That day, it went from 116 to 108. Okay? This is what happens when you have a hot market, when you have stocks that run up in a straight line, basically, to earnings. They end up getting sold off during earnings season. Even if they do really well, it's just a time to recycle for like the big institutions. They'll sell out their blocks of shares at a high price when we all buy it, and then they'll rebuy them back when it gets recycled at a much lower price. And they do this rinse and repeat over and over again. And that's why they make so much money. So anyway, going into earnings season, guys, I would definitely be, watching these earnings reports. You can make a lot of money around earnings time too. But just keep in mind, if you have a stock that week that runs up to earnings, let's say like 2 or 3 days before it reports, it goes up 5-10%, you better bet that no matter what they do on that earnings report, the stock will tank that day. That's just what's been happening. What's what I've noticed is happening. You guys can leave comments in the comment section if you see something a little bit different than I do. But this is what I've been following. This is what I've been looking at. So just watch your earnings seasons. And we have had a really big run up right to earnings. So I would be very, very cautious the next 3 weeks on the market. Okay, there's a good chance if you just hold out, you will be able to buy things at very good prices if you just wait a few weeks. Okay, you heard it here first. Green bar trading. I'm calling it right now. After earnings, these stocks will come back down and we'll be able to get them at cheaper prices. So anyway, that was my 2 cents. We are in earnings season, so let's see what happens. Hit the like button, helps out the channel. If you're new, subscribe. Have new videos every day. Yeah, that's about it. Everybody enjoy the rest of your weekend. Take care.